Hey guys, Clint Coons here, and I want to ask you this. Would you like to put between $14,000 to $30,000 into your pocket tax-free every year? Well, if your answer to that is yes, then you want to watch this video because I'm going to show you exactly how you can do that when you have your own business and you own a personal residence. Okay, let's get started. Okay, so here's the deal. The strategy I'm about to share with you right now is one of the most powerful strategies that we use when it comes to working with individuals who have a business of some sort to put tax-free money back in your pocket. And when you take this tax-free money, you think about it, you can use it now to pay for things like such as life insurance. That makes it tax deductible, your vehicles. Because every time when we're talking with people, they always want to know, how can I write off this that's personal in nature? Well, by itself, like a car that you drive to work, that's not deductible. But how about if I made it so that the income you use to pay for that car you drive to your job is tax-free to you? That is then a tax-deductible expense, but you're just doing it indirectly. Now, how are we able to do that? Well, we do that by harnessing the tax code and understanding that there's a very small tax provision built into the Internal Revenue Code that allows you to do exactly what I'm describing. I want to show you how to do that right now. Okay, let's go over to the board. Okay, so what am I referring to here in the tax code that's going to put this type of money back in your pocket completely tax-free? And it has to do with this provision here, Section 280A of the Internal Revenue Code. Now, if you're not familiar with it, why would you be? Most people are not familiar with any provision of the Internal Revenue Code other than the ones that require them to pay taxes or they can sell their personal residence. But this one right here allows you to rent your personal residence for up to 14 days a year, and the income you bring in, you can't go above 14, the income you bring in is tax-free. Okay, how cool is that? Now, I remember when I first brought this to my wife, there was the PGA Tour was coming into town. I said, honey, we could rent our house out for 7 days. We could probably bring in, over that 7-day period, $20,000, and that is completely tax-free to you. She looked at me and she said, so you're saying strangers are going to move into our house for 7 days? No, it's not worth it to me. Oh, I get it. Who wants strangers going through your underwear drawer, pulling things out, looking at them, sleeping in your sheets? So when we're talking about renting your house out, we're not talking about renting it out to strangers. Now, you could do it if you wanted to, but instead what I want you to do is take something you're already doing and just change how you're moving the income. If you can do that, just write yourself a check in a different manner, you can harness this provision to your benefit. Now, how does this work? Okay, so here's what happens. You first got to have a business, right? So maybe this is a real estate business. Maybe you flip property. Maybe you management. Okay, you manage something. Maybe it's an Uber business. It doesn't matter. As long as you have a business that's generating income, you can take advantage of this type of strategy. So the next thing you will have to have, of course, is a personal residence. All right, so as I stated, you're going to rent out your personal residence for up to 14 days. You cannot go over this. Okay, if you go over it, then you blow this tax strategy here. So here's my business over here that I'm running, and here's my house. Now, what you want to do is you want to rent your house to your business in order to have business meetings. Okay, now some people go, now why the heck am I going to have a business meeting in my house? Question is, why wouldn't you have a business meeting at your house if you can create tax-free income? So what we do, we've been doing this with our clients, is that we figure out how much of the space in their house, how many rooms are you going to be utilizing to hold a business meeting? So typically, let's say it's going to be your living room. So maybe that is 300 square feet. And then you got to use a toilet, right? So there's another 80 square feet there. Maybe you want to use your kitchen, all right, because you're going to prepare food. We're going to cover that as well. So maybe there's another 150 square feet. So you add everything up, and let's say the total square footage that you will use, again, this assumes maybe it's just you and your spouse having a business meeting, but you bring in other people, maybe that's going to expand, is anywhere between 500 to 1,000 square feet of space. Okay, so we first have to determine how many rooms we're using. Now, we also want to determine what are we going to do during this meeting. Well, I know something about when I go to meetings, I like to be fed. I like them to have some coffee, some snacks. Okay, great. So the people that attend this meeting, they're going to be fed as well. So then we need to figure out what the food budget is. See, how much food are you going to provide to the people who attend the event? So we're going to throw that on there. Now, do you want to bring any AV in? Okay, because this is typical. Whenever I have an event or I attend an event, they always have AV. Somebody puts on a presentation. Maybe you're going to go through a presentation on the business's last quarter's results or new opportunities. Now we can pass out paper, or how cool would it be if we could put that up on the TV screen and we go through a PowerPoint chart? Now I'm telling you this intentionally, right? There's a reason why I say use PowerPoint on the TV, because that's AV. And when you use AV, what we're doing is we're driving up the cost of the rental. I mean, if I have audio visual needs for my presentation, then it's going to make it more expensive. And so where's all this going? Well, once you figure out how much meeting room space you need, about the amount of food you're going to bring in, and how much AV you're going to need tech-wise, then what you do is you call some local hotels. So you call up the Hyatt, you call up the Marriott, and you say, listen, I need to rent, because I'm going to have a meeting, 700 square feet of boardroom space, and I want to provide food, and here's what I'm going to provide. And I need AV. Okay, you give them those 3 pieces of information and you get some quotes as to what it's going to cost. What is all this going to cost if you were to go to the Marriott? Let's assume they came back with a quote. You got food and beverage, the meeting room space, and the AV is going to be for a day, or for 4 hours, let's say $2,000. All right, that is your number. You've just now determined what the rental value of your house is to have for you in order to have a meeting. Because you could go to Marriott. I think everyone would agree. If I went down to Marriott and I rented the boardroom space, I brought in food, and I had AV, that I could write that off through my business. But why go to Marriott when I can create my own little Marriott property right in my own personal residence? So here's what you do then. You take this number here, 2K, and now you decide to rent your house to your business for $2,000. All right, now just think if you did this 14 times during the year. You had 14 meetings there. That would be a total of $28,000 your corporation or your LLC can deduct that you do not have to pay tax on, because I did not go beyond 14 days a year with this strategy. So this $28,000 is tax-free to me. If I am in a 30% tax bracket, what's that worth? All right, so in a 30% tax bracket, you're talking about, about $8,400, something like that, in real cash back in your pocket, because you're choosing to use your house to hold meetings. Now, when I talk about this, people say, well, I can't think of 14 reasons why I'm going to have a meeting in my personal residence. Well, you don't have to do 14 days. Maybe it's 5. So maybe it's only $10,000. The point is this: the more money you want to put in your pocket tax-free, then the more meetings you have to have. And if you can invite people over, you bring them in, then this cost will probably go up, because maybe I'm doing the food for 2 people, me and my spouse. But now if I bring some friends over who are also investors, or maybe I want to consult on my business, maybe this goes up to 6 people. Not only are we going to have food, we're going to have wine as well. So you see how those expenses can start to creep up, which means more money you can put back in your pocket completely tax-free with this one strategy. Now, there are some rules to this as well. You have to document it. So you have to document what it costs, right, for that meeting room space. You need to have a resolution by your business stating you're going to rent it out. And I would have a rental agreement between myself and my business for my property. And I would specify everything that I'm providing under this rental agreement for the meeting that's going to be held at my house. And then you need to document the meeting. All of these things are necessary in case you get audited. Now, we've defended people who have been audited before, and we've won the audits when this does come up, because we're sticklers on the paperwork. You need to be a stickler too in order to get this type of benefit right here. Now, once you have this money coming into you tax-free, what can you use it for? Let's say you want to buy life insurance, maybe whole life insurance. You want to invest in that. All right, so that's essentially now tax-free or tax deduction to buy your life insurance, because I'm renting my house out, that's no tax there, and I'm using that money to buy my life insurance or to pay for my car. So it's essentially like I just bought the insurance or I paid for the vehicle directly through the business and I wrote it off through the business. We're just using a different way in which to do this. You see, when it comes to tax planning and using entities, I've said this many times, entities can help you do more. You just have to be aware of the benefits that they can provide to you. And here at Anderson, that's one of the things we do. We teach a live tax and asset protection workshop every other Saturday. It's completely free to attend. If you want to take advantage of it, I have a link in the show notes below. You're going to learn this strategy and many more when we show you how to put tons of money back in your pocket using the tax code. Look forward to seeing you there.